Hi Mortgage Heroes, Andy Cruz here in Business Development, and this is Monday Mortgage Minute. Well, actually, it's Tuesday. Yes, yesterday was Martin Luther King Day. Banks were closed, escrow offices were closed, but we are back. We have a short week this week. We're on a 4-day week, but man, the headlines around housing and real estate and mortgage, they are flying all over the place. And I gotta tell you, some of the opinions are quite divided, but they're also both right, and it's just so odd. So let me explain really quickly a couple things that are happening. Number one, there's a lot of chatter about the incoming administration making some changes to housing, meaning it's possible that we'll see some sort of tax credit for first-time home buyers. Like, wow, that sounds like a great idea. Yes, it's a great idea as long as these first-time home buyers can, number one, qualify to buy a home, and number two, find that said home in order to get the tax credit at the end of that. So it's kind of like at the end of the road, the credit will show up. So there's that. Now, could that like encourage people to go buy a house? Yes. It necessarily won't fix the problems that prevent people from getting into homes, and that's what I wanted to talk about. Some of the biggest things we see here in lending that prevent people from getting a home are credit, lack of income, inconsistency of income, lack of down payment, and other associated things that have to do with credit and your just monetary and your fiscal behavior. So those tend to be the things that stand in the way of people getting home ownership, and we're not even into the market yet. Once you get into the market, you see challenges with inventory and supply, meaning like when we have really, really low supply and people that have very tight credit files and they have down payment and they can negotiate and they can bid, now you're in the market and facing an uphill battle. So, and not to paint a negative picture, but there's definitely some challenges to just this one part of what the new administration could be doing in the realm of housing. Now, do I want to see it work out? Yes, of course. I want to see it work out because I want to see first-time home buyers get into their first home. That's the entire point. So can it work? Yes, but what I'm saying, we got to do some work in advance to get there. We just got to do the work. We got to work on credit with people. We got to help people have good behaviors when it comes to spending and help them save money for down payment if they can't qualify for down payment assistance. They've got to keep their job and stay employed without big gaps of employment. So there's just other variables and details packed into this whole discussion that aren't currently being talked about. Now, the other thing I'm going to talk really quickly about today is mortgage rates. What the heck's going on with mortgage rates? They were low at the end of 2020. The bond market was suggesting that they're going to stay low well into 2021. You have the Fed saying they're going to continue buying mortgage-backed securities through 2021, which we made that video about, saying they're going to continue their participation, which artificially keeps rates low. But then you saw the bond market bounce back last week and rates went up. What was that all about? Well, we don't really know, other than that people were playing the bond market as they do because they do. And the other thing that we've been talking about for months now is eventually rates have to go up. Now, if I had $100 million to invest, and I could invest that $100 million and make 1.5%, or I could invest that $100 million and make 3 or 4%, well, the better investment is to invest the money in a place that has a higher return. Now, companies and funds that are putting money into mortgage-backed securities when they're artificially suppressed so low with such a low return, that only lasts so long. And we talked about this before, that you can't have rates constantly going down because the return on the investment isn't going to be worth the person who's investing. So then you're going to have less money in the market available, which drives rates up. And then by driving them up, the investors that are in the market can benefit more from that. So long story short, what are rates going to do? Gosh, after just last week, I have no idea. I'd love to sit here and tell you I have 100% confidence they're going to be low for the foreseeable future because that's what we're told. The Fed's going to continue investing and buying up bonds, mortgage-backed securities. But also, the bond market just kind of did what it wanted last week, and it kind of can still do that because in some ways the bond market is way bigger than what the Fed can or can't do within their allowable limits of participating in it, because the bond market is astronomically larger than even the stock market. So this is where I said early in this video, there's a split down the middle. You have half the people saying mortgage rates have to go up because they're going to have to. We're going to have inflation. We're going to have more stimulus, which is going to naturally make the cost of goods and services increase. And you have the other side saying we can't even afford for people to pay a higher rate, which we've been talking about for months. So rates have to stay low artificially. The Fed keeps putting money in. So are both going to end up being right? Probably, but I don't know when. And it depends on what day you ask. The old saying is that a broken clock is right twice a day. Well, it looks like both of these still could be right, even though they diametrically oppose each other. So anyways, that was a lot for just this week's Monday Mortgage Minute, but the reason I have to tell you this is because all these things are happening right now. We have inauguration happening this week, and then we're going to start seeing in the first 100 days the kind of pieces coming together of what it's going to look like and what it's going to mean for real estate and mortgage. And I'm kind of excited. I gotta be honest, I'm a little bit tepid. I don't think I'm super nervous, but I'm definitely watching, because no matter which way you play it, either one of these sides and arguments for letting rates go up or keeping rates artificially low, both of them can be argued for and turn out to be right. It just depends on when they're going to be right and for how long. So that's the part we're going to have to keep our finger on the pulse for, and we'll of course we'll always be letting you know what we know. But you know what? That's enough for this week. That's a long mortgage minute. Have a great week, and we'll see you next Monday.